Good morning, this is Dylan Jovine with Behind the Markets. Happy Friday. Today is Friday, May 2nd. And today I want to talk about Meta's earnings. You asked, I'm going to answer. A lot of folks have written in to ask whether I still like Meta up here after their earnings were released. The stock is up about $100, about 20% from our recommended price. And I was very happy with Meta's earnings and Microsoft's earnings and Visa's earnings. Completely happy this week. This is the week all of those reported their earnings, and I was really happy about that. But we still have a split screen scenario, and I cannot emphasize this enough. We have companies that are reporting earnings for the first quarter. The first quarter was January 1st through the end of March, okay? Remember, Trump's Liberation Day tariffs came April 2nd after the first quarter. They came April 2nd, so we don't know what that looks like yet. Those have not filtered through the numbers yet. They just haven't. Second quarter earnings reports are going to have the first half of that, and then third quarter earnings will have the full impact of that, no matter what. At the end of the day, people say, are you filling the rest of your position? Should you be buying it? Should I be buying it up here, et cetera, et cetera? First of all, I don't give anybody personalized financial advice. It's against the law. But what I'm telling you for myself is we have a split screen scenario where the market is rallying based on first quarter numbers that looked really good. They were really solid. And thankfully, companies like Meta and Visa are doing very well, Microsoft too. On the other side of the screen, it's hard to hold for a lot of investors, very hard to understand and hold these two opposing concepts in their head at the same time. That's the key here. A lot of folks, they rush in, oh, the market's here, happy to be here again, and they just go crazy, they go all in, and then it's the old Mike Tyson line, everyone has a plan until they get punched in the face. And then they get hit in the face when the market goes another leg down. So what I'm trying to say to folks is, look, I love the fact that Meta reported strong earnings. That didn't surprise me at all, because the first quarter, it looked like they were going to report strong earnings. Q1 looked very good. Again, it's not Q1 that we're worried about. It's Q2, Q3, and seeing what happens with these tariff policies over time. But again, a lot of firms out there, a lot of people, a lot of very sophisticated people, and some not so sophisticated people expect a recession or very high likelihood, even if it's not a recession. By the way, first quarter GDP came in with -3 or 4%, 0.3, 0.4 yesterday. So one more quarter of negative growth, and we technically have a recession. Make no mistake, one more quarter, and that's it. So make no mistake about it. We are definitely flirting with a recession right now. But even if it's not an official recession and it's a profit drawdown, remember something. Companies like Meta are advertising platforms. So who advertises on Meta? A lot of them are small businesses looking to get new customers. Now, if a small business in the real economy starts to see the shipments not coming in from China, the ports not coming in, the shelves are not as stocked as they were, you have empty shelves, higher prices, the product's not there, you're going to advertise less on Meta because you're not going to be making your money. So that's something we have to look out for in second quarter, but especially third quarter if these policies remain. So what I'm saying is we still have a split screen scenario. We're not out of the woods yet. Don't let the good quarter, first quarter, fool you. The other question that I've been getting a lot from folks is I've been almost over communicating, especially with takeover targets. They've been sending 2-3 emails a week because Midnight in America was something that we were talking about with them, saying the market was overvalued, and a lot of people thanking us for over communicating, for communicating. Apparently, they've dealt with a lot of other independent research firms and editors that basically tend to hide under their desk when things go wrong or panic. It's one thing we don't do. We don't panic. We don't hide under our desk. So I was thinking about why we don't do that. When I was a young person on Wall Street, really young, in my 20s, and I was just starting my career, I remember somebody gave me advice. I was too young to know the difference, and I put all my money into a company named Comptronics, CMPX, at 22 3/4, everything I had at the time. And I came in one day and there was fraud at the company. And the person who recommended that to me, he told me to load the boat on it, this very fancy analyst, I won't say his name, but everybody respected him. He was the man. He wore the fancy watches. He had the Central Park South apartment. He was so impressive to me as a young person when I only saw things superficially. But all of a sudden, he recommends this. I lose everything I have on that stock after accounting fraud is discovered at the company. I bought it at 22 3/4. I came into the office one day, it was at 2 1/4. I lost all I had at that time. And I remember I walked up to him. He didn't say a word to me. He acted, well, we call him Wall Street. He DK'd me. He didn't know me. He acted like he never recommended it, never talked about it again. And I remember thinking to myself, my God, how off-putting that is to actually recommend something and then when things go wrong, not to ever talk about it again. That is a serious defect of character. I found that so off-putting, I vowed I would never be like that if I was ever in that position, ever, because there was nothing worse than that. We're all adults. We win some, we lose some. I make recommendations. Sometimes they go higher, sometimes they don't. But we win some, we lose some. But one thing I will never, ever do is hide under my chair, under my desk when something goes wrong. And I certainly will not leave you alone during market turmoil like this and hide under my desk, sucking my thumb, waiting for it to be over, only to come out again after it's all over to look like a hero. We're not going to play the game that way. It's just not even in my DNA to act like that. So I'm going to be there with you every step of the way, as I have shown. That's just my nature, period. So you can rest assured that's going to happen. They're going to have to take me out here on a stretcher for me not to record these videos or send emails to you to help you understand what's going on and how to play it, because we are close to or at retirement age, and that doesn't wait for anybody. And you guys have trusted me with your hard-earned money and decisions, and that means something to me. Anyway, that's all I have today. Forgive the babbling, forgive the sore throat, and forgive the classes. I forgot them again because my head isn't screwed on right this week. I've been a little off. And now my son has strep throat, so I'm going to be going over to take care of him. Anyway, that's all I have today. Have a wonderful day.